So, Diego, I want to know about a little bit about yourself and your trajectory in the market, and now in how exactly you implemented smart contracts on the Bitcoin network. Uh, how what is the story about?
Perfect, Leonardo. Pleasure to meet you. and
Sorry.
uh, my trajectory in this space started in 2012 with Bitcoin. After a friend of mine got me back into Bitcoin, I got in touch with Bitcoin in 2011, but as I like to say, I didn't get it at the beginning. And then a year later, a good friend of mine, Wences Casares from Sapo, got me back into Bitcoin. We did an experiment. He was in Silicon Valley. I was in Buenos Aires. In Buenos Aires, we had capital controls, so it was almost impossible to get money in and out of Argentina, and or was very costly and and cumbersome. And yeah, with this experience, he sent me around 5,000 Bitcoin. Back then, it was like $50,000. I sent it back, and all this happened in a peer-to-peer fashion. No, it was like we didn't have to ask permission to anybody. He sent me the money, I sent it back. So when that happened, I said, I'm one of the pioneers of the Web 1.0. Now that we are talking about Web 3 in Latin America. So when I had that experience, I said, okay, this is something revolutionary. This is how what I call the Internet of Value or the Internet of Money should look like. No, it's the same openness, neutrality that we experience in the Internet of Information, but in the financial world, and it goes beyond finance. That's why I like to talk about the Internet of Value, because it's anything that is valuable for human beings. Reputation, identity, all the values we handle in our lives. And so that was the beginning. And as I knew that disruptive technologies are very difficult to understand, what I did is I started doing everything, like meeting in cafes with people to buy and sell Bitcoins. Created with my, I used to have a software factory called Synergia. We created the first payment processor in Latin America for Bitcoin called Resto Coins. We convinced a couple of restaurants to use it. And then in 2013, I started creating meetups and the Bitcoin community in Latin America together with Franco Amati and Rodolfo Andrañez. And in that process, I was looking I wanted to decide where I wanted to apply my energy and efforts. And I decided at the end of 2013, I wanted to devote myself in full to use these technologies for financial inclusion, to provide financial services to those excluded or more vulnerable in our societies. And with that, we created a group of voluntaries and started doing some pilots and experiences with people from the slums of Buenos Aires in the Bitcoin meetups. And that's when I realized that Bitcoin itself was not enough. It was the foundations for a new financial system, but people who is living day to day or week to week needed what now has the name of stable coins. So we were looking to build stable coins long before it had a name. So that's when I started chasing this idea of like extending Bitcoin to become a full financial system that could serve the needs of any human being. And another another lessons came from that learning process. So we understood also that reputation was key. So creating self-sovereign identities and reputation-based identities was key, because people excluded don't have anything to put as collateral. So providing them with reputation identities was providing a collateral for them, enabled them to access better markets, so to improve their lives. So with that idea is that I reached out to Sergio Lerner, which was the first person to create a Turing complete or general purpose cryptocurrency called Quixcoin in May 2013, a year before the Ethereum idea was presented to the world. So he was, and we started having discussions. Sergio had a team already working on the evolutionary step of Quixcoin called NimbleCoin. So we started having conversations and discussing how we could work together to expand Bitcoin into having smart contract capabilities and the capability of issuing stable assets or other as any asset in the system. And that's how at the end of 2015 we decided to join forces, and based on the original paper from Blockstream on sidechains to Bitcoin, create the first sidechain to Bitcoin with smart contract capabilities. And so that's how it started. No, so we decided to do a sidechain to Bitcoin, to use the hashing power of the Bitcoin network to secure that sidechain, and also to have Bitcoin as the native currency of this second layer, because we realized that having full economic alignment with the Bitcoin ecosystem was key. No, decentralized systems are protected by game theory. So if you have misalignment of interest between the secondary network and the main network, that will eventually create conflict and collapse. So we had this understanding that we needed to use Bitcoin in order to incentivize the Bitcoin miners to protect both Bitcoin and RSK. And that became a reality in January 2018. And it started with only 5% of the hashing power of Bitcoin protecting it. And now it has around 60% of the hashing power of Bitcoin that is protecting both Bitcoin and RSK. So RSK, or rootstock, as we like to call it, became the one of the safest smart contract platforms in the world, and the true sidechain to Bitcoin.
Thanks. That's nice. And what is and what does it? The IoV Labs. What is the company? What the company does, and what's the main goal of the IoV Labs?
Well, IoV Labs. Well, as I said initially, we wanted to extend Bitcoin to become a financial ecosystem that could serve 1 billion people excluded from the financial system. But I think now we broaden the scope, although that's one goal we want to achieve. I think what we are building is a financial system or ecosystem that can serve any human being in the world, regardless of their condition. We still, want to help those who need it the most, but we still in that process of creating initially protocols, technology, deep tech that enable Bitcoin to scale and to have functionalities that were missing, to be able to secure other assets that are not Bitcoin alone. And over the years, we incorporated also layer 3 protocols, peer-to-peer protocols that use the blockchain as a safeguard, but that they don't need to operate on the blockchain, because that on regular basis. So you do all your operations in a peer-to-peer fashion with secure signed messages, but you have the assurance that if some of the parties doesn't fulfill their duties, you can go to the blockchain and enforce the action. So it's a very good way of scaling blockchains and sorting out, most of the problems of blockchains, that are the user experience, the scaling, and the interoperability of blockchain. So with that is that we created the RIF protocols on top of RSK, on top of rootstock. And after that, what we started doing is, like, because all the technology we create is open source, and the networks we created are also community driven and managed. We have no control on the network. So once we felt those networks achieve a sufficient level of decentralization and maturity, our focus started on helping entrepreneurs build these financial startups that we call them like the fintechs 2.0, no, like the neo fintechs that are, or neo banks that are based on decentralized infrastructure, and that's what actually IoV Labs is doing, is helping entrepreneurs around the globe use these technologies to create this financial ecosystem that can serve any human being in a neutral and open and global way, all secured by Bitcoin. So that's the role of IoV Labs today, like helping that ecosystem grow, and we have some of the best, I would say, startups and entrepreneurs in the crypto or blockchain space, like Money on Chain, Tropicus, Sovereign, and that they are really innovating and creating some amazing protocols, that enable this truly peer-to-peer financial system to exist and to serve, hopefully billions of people someday,
So, do you consider yourself as a Bitcoin maximalist? And do you think that Bitcoin has everything to suppress in the DeFi sector? Do you think that we don't exactly need the other smart contracts platforms like Ethereum, because Bitcoin can substitute this the DeFi's platform, or you think that we need some smart contracts platforms and DeFi dApps to interact with the Bitcoin?
I think of myself, I think the Sovereign community coined a term that is the Bitcoin mutants, and I think I like that concept, because Bitcoin mutants are, maximalist from a monetary perspective. I think like having a reserve of value that is neutral and has, no political sign behind it, is like a neutral reserve of value for the world. It's hugely important for society. It will remove a lot of the violence in our societies, because if you look at the wars in the recent centuries or maybe millennia, many of them were to protect the currency of the empire that was reigning in the moment, whether it was the sterling pound or the US dollar, or so many wars were fought basically to protect that. So having a reserve of value that is neutral, and it's very, very powerful for the world. So I'm maximalist in that sense, and I think for mid to long term store of value, Bitcoin is the asset, is the currency, is digital gold, and but at the same time, as I expressed, like if we really want to serve, because Bitcoin with the volatility it has today, it's only usable for people who is like either with a mid to long term horizon, financial horizon that can store value for 2-3 years or more, or people who is in societies that are so volatile that Bitcoin looks like stable. like you might mention Venezuela, or even Argentina is getting to that point. So in that sense, it's like it's two extremes of society, but then everybody in between, the people living day to day, month to month, quarter to quarter, they need a stable asset, they need our assets. So my vision is like, if we really want to change, to create a financial system that can help anybody, we need to go beyond Bitcoin, the asset, and we need to create this full-fledged peer-to-peer financial system and monetary system, and that's exactly what we are building on top of Rootstock, with IoV Labs and the ecosystem. So we are, maximalist or I'm maximalist. I wouldn't talk for IoV Labs because IoV Labs is very diverse as well, but I'm monetary maximalist, but also from a technological perspective, I embrace diversity. I think it's very important that we have Ethereum. It's very important that we have all these experiments that are being done around the technology, because also diversity creates anti-fragility. If you have a single system, you know what you have to attack in order to destroy the phenomenon or the movement. If you have multiple systems properly interconnected with different security models and risk, I think the chances of the decentralization movement of succeeding is much higher. And at the end, that's what we want to protect. No, I always said I rather have like 1,000 times more decentralized protocol, even if it's not perfect, not fully decentralized, or has levels of security that are inferior to Bitcoin, than a centralized system. So the fight here is to remove the forced intermediation from the financial system. So I don't like to say remove the intermediaries, because I think some intermediaries will adapt and will provide value, but if they don't provide value, they will be removed. No, so what we are creating is optionality. No, is allowing people to choose the intermediaries that really provide value for them, and remove monopolies and oligopolies in the financial system. So that's the objective. So anything that helps in that direction, for me, is welcome.
And do you believe Bitcoin still needs the network itself? It still needs to be updated? If so, which update do you think is the most essential? And already making the second question, it's about that. What do you think about the BIP 119 update? Many people believe to be an attack on Bitcoin's fungibility.
That's the one related to covenants, no? Yes, yeah. I think it's. I would say I'm a proponent. This is something I was involved in the scaling wars, like when right before Bitcoin Cash appeared, and I was engaged actually because I wanted to avoid the fraction. The fragmentation of the community, but one thing I understood from that process is like Bitcoin needs to ossify. It's like more and more over time, Bitcoin needs to have less and less changes, and to make changes in the Bitcoin protocol more and more difficult over time. That's part of the security of Bitcoin. It's like as it gets more decentralized, decentralization also makes systems tougher to upgrade because reaching consensus in a highly fragmented system is very, very tough. So my point of view is like, the direction of Bitcoin should be in the direction of ossification, and we should, add less and less of the things. And regarding the covenants, although I like the idea of covenants in abstract, I think in the case of Bitcoin, as you say, and because of how Bitcoin works, because we should do like a deeper analysis, but because of how UTXOs works, these unspent transactions work, it kills the fungibility and might create something that is very disruptive for Bitcoin. So I'm against it, although in abstract, I think covenants can be a very powerful tool, but maybe they can be applied in upper layers like rootstock, and in that case, they wouldn't be attacking the fungibility of Bitcoin and providing the value that we need from covenants. So in that sense, because by being account-based, you can have covenants that will like cancel transactions for a certain period of time, but you are not attacking the fungibility of the asset by doing that. It's something that is, in that case, the reversion of a transaction or the pausing of a transaction is attached to an account, not to the asset itself. So I think there are better ways to do covenants than implementing them on Bitcoin directly. And going to your other question of what I think Bitcoin needs to, in order to like which changes we should add. I think the only one I would add is the BIP 300, that is basically enabling trustless sidechains to exist. It's like creating this interoperability with other blockchains so we can keep innovating on the Bitcoin ecosystem in secondary networks, in the sidechains of Bitcoin, instead of trying to keep extending the Bitcoin protocol. And why this is important is because there's what I call a trilemma, the blockchain trilemma, that is like you always have a trade-off between security, scalability, and functionality. So if you want to have more functionality, you are sacrificing security. If you want to have more scalability, you have to sacrifice security. And that's exactly what Bitcoin did, is sorted out the trilemma by maximizing security and sacrificing functionality. That's why the scripting language of Bitcoin is a push-down automata. It's a sequential language. Doesn't have logical bifurcation. Doesn't have loops or repetitions of, because in that way, an action can either go forward or not. But there's no you can know exactly the surface of attack of a script. So that provides a level of security to Bitcoin that no other blockchain can have. And so in that sense, I think what we should do is like enable this interoperability so sidechains can be added to Bitcoin in a trustless way, fully trustless or trust minimized, as Nick Szabo would like to say. And then stop adding anything to Bitcoin. Like, let Bitcoin be what it is. Like, it's the safest decentralized blockchain and the safest decentralized asset in the world. And then do the innovation on the upper layers. That would be my position. So I'm a big supporter of BIP 300, the same as our chief scientist, Sergio Lerner, because we understand that's the best way to protect Bitcoin as well, no? To ossify it, to make it like fulfill its duty of being the safest store of value or blockchain in the world.
So the technology and the goal of the Bitcoin always has been, in my perspective, a store of value and currency of exchange, right? But right now, the market see as a risk asset, as a technological asset, and it's very correlated with Nasdaq, for example. Do you see in a short term this correlation be broke, the Bitcoin being this correlation with Nasdaq, or the market seeing the Bitcoin as a store of value, not as a risk asset or technology stock?
Yes, I think Bitcoin has been susceptible to it's related to the holders of Bitcoin. No, the price of Bitcoin, when you look at the price of Bitcoin has fixed supply and dynamic demand. No, so there will be 21 million Bitcoins minus the Bitcoins that were lost in the bottom of the sea. That we estimate is like around 4 million Bitcoins. So that will be the supply of Bitcoin. No, it will be that or less, but there's no way there will be more. So the price of Bitcoin, it's fully dependent on demand. And what you can see is like in the different cycles, different participants come into Bitcoin. And the last bunch of participants that came into Bitcoin are corporations, in a big part because of all the work that Michael Saylor did. Then you have, or Elon Musk as well, buying a lot of. So you have big tech corporations like the first movers in the institutional space. Some institutional investors getting into Bitcoin. So the behaviors we are seeing are related to that. It's like they were the last flow of money into Bitcoin, and they behave in a certain way when they see crisis around. what they do is they don't fly to quality like they used to do in the past. And I think that is a pattern that was broken in 2008, 2009. They fly to liquidity. Today, in today's world, where it's like prioritize is the nimbleness, the agility you have with your money more than the quality of the asset where you are staying. Because the cycles move so fast that today all these investors decide, like, when turmoil arises, what they do is they fly to liquidity. And today, still the more liquid asset in the world is the US dollar. So for them, that is the pattern. So it's logical that we had what we had in Bitcoin, because we had on one side the deflation of the DeFi, speculative DeFi bubble, because I think DeFi can be used for the real economy, for the productive economy, but the DeFi phenomenon in Ethereum was a purely speculative phenomenon with very, very little exceptions, but mostly was purely speculative. So we have the deflation of the speculative DeFi bubble. We had the Luna situation where we had a sell-off, like massive sell-off with no, without any regard for the market of the Luna assets, which was massive. And on top of that, we have the macro crisis of the world, where all these institutional investors and corporations are running are flying to liquidity until they see how the landscape looks, and then they will, redistribute their money into based on what survives. So in that sense, I'm pretty positive that Bitcoin will recover, and Bitcoin is a mid to long-term reserve of value. So like short-term volatility is not so important, of course, within certain boundaries. But what Bitcoin did in this cycle is similar to what did in previous cycles. That was like a retraction of up to 80% of its all-time high value. So it's within the boundaries of what you should expect in a Bitcoin cycle. It's not nothing new. And the other thing is, like, in my, of course, I don't. It's like this is kind of a foresight that has it's just my point of view. But what we will see in the next cycle is like Bitcoin being connected as a store of value to the real economy, to the productive economy, and more connected to that than speculation. So what I think is, like, the next cycle will be a cycle where Bitcoin will be less volatile, because it will have flows of money that come from areas of the economy that are not so speculative like the ones we had until now. So I mean, Bitcoin changed, because in the beginning it was highly ideological. It was like people in Bitcoin, in the original Bitcoin space, were there, like I was, because of the ideas that we see represented there. But then the following waves were more attached to speculation. So I think the next wave will be attached more to the real economy and the midterm and long-term reserve of value. So I expect volatility to go down, but clearly it's still a risky asset, and that's why when people tell me how much Bitcoins I should buy, although I don't follow my own advice, what I tell people is, like, put there some money that if you lose it, it won't affect your personal economy, your financial stability, and put it there, like, with a time frame of at least 2 to 3 years minimum. So it's money you put there, you don't need to touch for 2-3 years. If you do that, you are safe. It's like so I think it's, if people feel defrauded by Bitcoin, is either because they were trying to do like a short-term speculative move, which is not the right thing, or they were exposing too much to it and not understanding the game they are. But those who have been in the game for a long time, this August, this year, it's my 10th anniversary on Bitcoin. So I think for me it was not surprising. It's part of the process, and it's okay. It's like but clearly it's still not the reserve value of the world. It's like only less than $1 trillion. We need to have Bitcoin in a stable way with proper flows, of money, in the trillions before we can call Bitcoin a reserve value of the world. No? So we are still like maybe a decade from that moment.
Thank you. And for the last question, I'd like to know about your vision in about the CeFi and DeFi in the Bitcoin, of course, regulation. If it will be friendly regulation and will help the assets advance, or can you see as a prohibitive regulation is coming?
I think regulation is never friendly with disruptive technologies, no? So in general, because if you think about that, regulation is protecting the status quo. So usually regulation is based on past behavior. So regulation tends to try to stifle innovation, but not on purpose. It's just the dynamic, no? It's like you create the regulation afterward. It's the mores or the habits of society. So it's always like protecting the past more than the future. But innovation creates disruptive value for people. So people, even the regulation is not in favor, people use it, and there's always a tension, no, between the value that innovation brings, that also comes with some risk. And the past behaviors of society. So there will always be this tension. It's like I always use the example of Skype. Skype basically disrupted all the telecommunications regulations in the world for maybe 10 years without having a proper regulatory framework to operate. So it was breaking the rules on international telecommunications, but then it was offering so much value for people that they actually were using it anyways, and the regulators cannot go against people. So at certain point, the regulations had to change, and very likely Skype also had to change to some. So it's always like somewhere in between. It's like it will not be what regulators want. It won't be what innovators want. It will be something in between, where you can create innovation and provide value to people and society while you protect certain values of society as well. No, because it's like I think part of the regulation is okay. Part of the regulation becomes weaponized and is used as a political tool to protect the status quo. No, so it's not that all regulation is bad. It's like the problem is that regulation in many cases end up being used as a weapon to protect certain interests, and that tension will exist as long as innovation exists. That's part of the process. So I wouldn't say there is friendly regulation, but I think that is a fight that will continue until all Bitcoin and these technologies become mainstream, and then they will be boring. We won't be talking anymore about this. We will be using them in our daily lives. No, but we are not there yet. Again, I think we are somewhere between 7 to 10 years before this cross the chasm into a meaningful part of the society.
Okay, thank you very much, Diego. And would you like to speak something else, some compliment a topic or announcing something?
No, I think it's we cover most of the interesting topics out there. I think it's what I always tell people is like without exposing too much or risking your financial stability, like download the wallet, buy a fraction of a Bitcoin and or any asset on Rootstock, which are easy to use, and test these. It's like I think the biggest knowledge I had or learnings I had were when I started to be exposed to the technology and use it. Like without using it, all this is an abstraction. So what I recommend people is like go there, try it, do it wisely, don't risk your economy, but experiment with the technology, understand how it works, because clearly this is going to reconfigure how the world works. It's like we are really building a truly global financial system. So the frontiers are going to be blurred, and this is a new world. And yeah, if you don't understand how it works, you will be excluded. No, it's kind of a like second phase of the digital divide of Negroponte and the Media Lab, like getting stronger. Now it's not only about the digital divide and access to information, but now it's about access to economic tools, to opportunities. So yeah, being excluded from this, will diminish your opportunities to grow and prosper.
It's about we have the opportunity to validate ourselves, our own transaction in the network. It's something.
Absolutely.
Okay. Thank you very much, Diego, again for your time, and hope you see you again soon.
My pleasure, and thank you for inviting me, and happy to join again soon.